Hello everyone and welcome to Investing by the Books, a podcast by WWII. I'm your host Eddie Palmian, and with me here in the studio is my friend and colleague Niklas. How are you?
I'm great and really excited for today's episode.
Yes, today we have the pleasure of being joined by Staffan Salén. Staffan is one of Sweden's most prominent businessmen and an owner of the holding companies Salénia and West India. Salénia is the family business with more than 100 years of experience, where he, together with his brother Erik, represents the third generation. Staffan is also the chairman of the publicly listed companies Sagax and eWork, as well as a board member of Green Landscaping. So, Niklas, which book will we speak about today?
So when discussing the topic for today, we could have chosen more or less any book about business and investing because Staffan is a true bookworm as us. And for this episode, we chose the book describing the family history called the Salén Story, which I have here. It's written and edited by Staffan Sjöberg with contributions from the family.
And what do you think makes this book relevant for Investing by the Books podcast?
So we and many of our listeners are really eager to learn about business history and entrepreneurship. And the Salén family has a strong heritage spanning more than 100 years. As we will hear more about in the episode, the family has a long-term focus and has been able to withstand several challenging periods throughout the history of the group.
The Salén Story was published in 2007, and we are delighted to have one of the owners of the third generation on the show today. Here comes our conversation with Staffan Salén. Hello, Staffan, and welcome to Investing by the Books podcast.
Thank you. I'm delighted to be here.
We're delighted to have you here in the WWII studio here in Stockholm, and thank you for taking the time. So, where do you normally operate from?
I operate from Stockholm myself. I mean, I've been born and raised in Stockholm and lived here all my life. So we have our offices here as well.
Not too far to come into the office here today, then.
No, a brisk walk.
And to begin, can you tell our listeners a bit about yourself?
Yeah, that's a very dangerous question to pose to a 56-year-old. But I was born and raised in Stockholm. I'm a third-generation business owner and investor in a family business. In my spare time, I like to read books, which makes this an excellent podcast for me. Also investing, of course. Being with family and friends, skiing, listening to music, sailing, doing a lot of stuff.
And I'm not sure if this is a myth or not, but sometimes you hear that the first generation builds wealth, the second generation manage it, while the third generation destroys it. Is this something you fret about?
Strangely enough, I've heard that myth too. It's not entirely a myth though, in the sense that many family businesses don't survive the third generation, but it's not necessarily that the company goes bankrupt or goes under. It's rather that by the third generation it might be difficult to find someone who wants to run it or who is perhaps well positioned to run it either. You also have the difficulty of an insider-outsider situation where some people work in the company, some not. And you have a multiplicator effect where the third generation usually are that many people. I mean, if you take for the sake of argument that every generation, every person has 3 children, right? And a generation is 30 to 35 years, something like that. That means that you have to triple the wealth in 30 to 35 years in real terms. And from that you have to take dividends, of course, just to stand still. And that is a pretty, big task. So eventually people want to see the color of money and they sell the company. So it's not really that it gets destroyed in the third generation, but it gets sold.
The challenges of compounding.
Exactly.
And today we will speak about the book, The Salén Story, that we have read with great pleasure. So maybe you can start with telling us a bit about why the family decided to embark on this project.
Firstly, we thought we had a story to tell, but secondly, of course, we might have, we did it in 2007. We could have done it in 2015 when we had our centenary jubilee, but so many of the main actors in this book were getting old, and we wanted to kind of get those stories down on paper before they passed away.
And as we read in the book, the shipping empire that your family is renowned for started with your grandfather, Sven Salén, buying his first ship, the Robur, in 1915, and then went into banana trading. Can you tell us about this early stage of the business?
Yeah, I'm sorry, my voice is a bit shrouded today, but it's not from debauchery, just flu. He was born in 1890, so he started his first company when he was 25. This was during the First World War, so what he did, he wanted to go into shipping, and the cheapest way of doing that at that point was buying sailing ships, because steamships were all the rage, but that was a cheap, and he didn't have that much money, so he bought a couple of sailing ships, and business was booming during the wartime, and then the war ended, and the markets, as they do in shipping, collapsed. So he just got out in time to save roughly his and the investors' money. But I think that was a rocky start. Then he, through his sailing interests, got acquainted with the family who ran the major banana import company in Sweden, Banankompaniet, and he established for them a reefer shipping company to carry their fruit from different destinations to Sweden. So that was his start. Then eventually that went very well, and he acquired the Banankompaniet and also invested in a myriad of other companies. Our family has been invested in over 200 companies since 1915, but that went on up to, I would say, 1950, something like that, when he was 60 years old, and then that's when things really got going. So it's a bit like for Warren Buffett: the longer you wait, the longer you compound, the better it goes. So then he went into tanker shipping, which was then becoming a very big thing when they found oil in the Middle East. And then eventually they went into dry bulk shipping as well, and then he passed away in 1969.
I think it's fascinating to read about Sven, and something I really felt strongly about was that, this is a long time ago, and his management style seems to have been very modern in a sense. He was very hands-off. How common was that management style back then, would you say?
I'm no expert and I wasn't around, but I would assume that regular companies were much more hierarchical. He was very much out traveling, both for business but also for pleasure. He sailed a lot competitively. He had an Olympic gold medal and an Olympic bronze medal. He won what in Sweden is very well-renowned Svenska Dagbladets bragdmedal, the only sailor to do so. He won the World Championship, so he was always around sailing and doing business. But because the modes of communication at that point were so bad, you sent telegrams basically to communicate, he needed to have very strong operational people in the management. So I would say maybe he worked a bit more like a chairman than a CEO at that point, but I would assume his leadership style was much more delegated than what was usual at that point.
And me and Eddie are both really interested in corporate culture, and in the book we read about the Salén Spirit. I'm really curious to hear more about what that really means and what it is, and if it's still around in today's business.
Yeah, I'll get back to culture when we talk about other books later, but I think that is a super important point in any company then, and it's equally important today. And if you read the book Outsiders, for instance, I think that's as much about corporate culture as it is about asset allocation, which is usually what it's described as. But I think the culture was very delegated, which gave you huge mandates at a very young age. A person could be sent down to Israel or Ecuador to negotiate a fruit contract when they were 25 or 26, which was super important for the company. So it was a bit of sink or swim, perhaps. It was very positive. You were allowed to make mistakes. So I think it and also risk taking. It was a part of the culture as well. And then I think for a long time you also felt that you were on the bandwagon of success, which I also think success feeds itself in a way. And I think that was also an important point. But all this is hearsay. I wasn't there myself, so I've talked with my father and other people who were around. There is actually still an organization for the people who worked in the shipping company that meet 4 or 5 times a year and have a lot of fun together.
And I think I read about there's this house that former employees can go to or could go to. I don't know if that's open.
Yeah, they owned a couple of houses at we'll get back to that later, but when the shipping company folded, that actually was in a foundation that was ring fenced. So anyone who worked in the company at that point were allowed to use those houses, and then they've sold some of them, and there's been a lot of money. So they're doing a lot of things because of that now.
And we spoke about the early days, the banana trading, and the First World War. How was the Second World War, and how did you manage that in the family business?
The Second World War was more difficult, I think, because it was even more risky from shipping point of view. A lot of ships got sunk, and we had one as well, and that was a terrible thing for the ship owners. What risks are you taking? When you're doing this and you're doing something good for the country, but you're risking your people. So how do you manage that? But that was, of course, a very difficult period with a lot of restrictions.
And as you mentioned, in the 50s, things got better. The tanker industry was coming up, and your family did a lot of good work there and had some prosperous times. Then your father, Sven Hampus, and his brother, Christer, they took over from Sven when he died in 1969, and the 70s started, and this was a really tough decade for the business. So maybe you can talk a bit about how these times, what happened then.
Yeah, I think it's important to point out that my father was 30 and my uncle was 28 when they took over this huge company. So there was a CEO in place, very strong. He was 20 years older, and I think that complicated things quite a bit, because I think he saw himself more like the carrier of the flame more than perhaps my father and my uncle. So that complicated things. But that set aside, the 70s, of course, was a rude awakening after the 50s and 60s, who were, boom times in many aspects. So what really happened was that the oil crisis transpired in 72, 73, and that in turn led, of course, to a huge slump in the demand for oil freights. On the other hand, you had the shipyard industry in the whole world just chugging along, because at this point in time, in China, in Japan, in Korea, there were huge shipyards that were governmentally owned and I think seen as Keynesian tools for employing people. So whether there was a demand for ships or not was, of less importance. And I think that still holds true today in a sense. So there was a huge overcapacity of ships and less demand for freights. And that led to a situation where from having been 90% time charters and 10% spot in the market, that flipped around. So suddenly you had 10% time charters and 90% spot, which created a hugely volatile market for oil freights. So, it could go up 100%, it could go down 80%, over a period of a year. So it made it very difficult. The Salén shipping company had just ordered 5 huge ULCCs that went straight into the Norwegian fjords for layup. So this was a very difficult period, of course, and a lot of money was lost.
Up until this point, the company had been private, And then in the middle of this, during this decade, which was really tough, in 1976, you listed the company for an IPO. Why was that, and how was that received?
I really don't know, to be honest. I mean, these days it sounds a bit counterintuitive, right? But I don't know if it was if they needed money or if it was to kind of broaden the shareholder base. There might have been tax reasons. You know, Sweden was a difficult tax country at that point. So I actually don't know.
But things got tougher, and the Salén Shipping Group declared bankruptcy in December 1984. And then, as we spoke about, having bet that the cycle would eventually turn, and at this point, it couldn't come to an agreement with the banks nor the Swedish government. And this was, in Sweden, the biggest bankruptcy since the Kruger crash in 1932. So you were young at the time, but how did you feel the impact of it?
I was 17, so it wasn't really. I had other things on my mind at that point. But of course, for my father and my uncle, it was a tough period. I mean, there were a number of businesses outside the shipping company, but that was, of course, the one that was well known. And there was a lot of work, and it's also, okay, I would assume, frustrating, putting down a lot of work, transpiring into nothing. There was a huge what you today would probably call a Chapter 11 arrangement, where there was a lot of discussions with the banks and the states and others who had interests in the company, but eventually it didn't pan out, and the family itself had 300 million on the table to kind of finance it, but in the end it didn't get together. Not necessarily for the bad. I think it would have been some very difficult years to come as well. But at that point in time, it was really, a lot of work put into it.
And we see today, I mean, both you and your father have large interest in society and politics. And I'm curious to know your view on even though you were young at the time, you've heard the stories from your father probably. And can you talk about the bankruptcy more and what you think the government could have done differently?
I'm not at all a fan of government aid to companies. I think that's if you reap the benefits of a market economy and capitalism in good times, you can't come crying to the state in bad times. So that's not something that I would recommend for anyone. That being said, this was a Chapter 11, right? So that then you end up in a situation where the state has to do some kind of assessment. Or can we recoup anything by doing this reconstruction of the company rather than putting it into bankruptcy? So it's rather a question of salvaging anything from this than giving money away.
And at that point, if I read it correctly, it wasn't like the most business savvy people who then ran the company in that situation and maybe didn't handle everything in the right way, or how would you explain it?
No, I think a lot of the people had been there for a long time, so I wouldn't put the blame on the management at that point.
No, but I actually mean the government. I mean the liquidator.
Okay, yeah. I think it was difficult because the government had just closed 2 Swedish shipyards, and firstly closing, and letting a lot of people go in the governmental sector, and then, seemingly aiding a private company would have been, difficult from a communications point of view, I think.
And going a bit into like today's time, I mean, Sweden is currently seen as some part mismanaged, I think, from the outside. Curious to know your view.
Possibly even from the inside.
Yeah, and this is a big question. I mean, there are many different aspects, of course, but I mean, do you think it's a reasonable view to have? I mean, from outsiders.
I think we've had a difficult situation in Sweden for the last, 8 years or 10 years, where we've had minority governments that, have either taken bad decisions or avoided taking difficult decisions. Like we've closed nuclear plants. We had the refugee crisis, which was handled in a not ideal way, I would say. We have had increased bureaucracy in different shapes and forms. But also, a lot of decisions that should have been made regarding crime, education, infrastructure haven't been done. I think I would say the current government are doing a lot of things now that looks promising in my eyes.
And from the monetary policy, I mean, we've had super...
don't get me started on monetary policy. No, I think that of course goes for the entire world, but the excess of capital being poured into the system by the central banks has of course made a lot of things much worse. I mean, pouring billions and trillions into the economy in a booming business cycle makes no sense. So that's why we've seen, blue sky companies being valued to the moon, conspicuous consumption, everything. And I hope that is a lesson learned. I know I think you talked about The Price of Time by Chancellor, which is a very good book, I think, describing this and why the interest rates should never go below 2%.
So instead of asking you more questions, maybe the listeners should listen to that episode then.
Yeah, I think it's a fantastic book, really, and it really puts the spotlight on the folly of the monetary policy of the last decade or so.
The main focus for that episode was capital returns. His book about the supply.
Okay.
Side.
That's also good.
And to follow up on where we were, I mean, your fathers, Sven Hampus and Christer, went separate ways in 1985, and both continued on the path their father Sven started, which is developing companies from an early stage. What is it that, I mean, you and your father brought to the table, sort of, I mean, in a successful way to the early stage of a company?
I think one thing that you have to do is to have a very long term on early stage investments, or you'll get very disappointed. I would say it takes at least 10 years to build a great company. Everything else is like a total outlier. And then, of course, you need some capital to be able to help the company. We seldom participate in more than 2 rights issues. Because then you usually know which way the company is going. But that being said, I don't do as early stage things these days as I did earlier. Maybe because I won't be able to kind of reap the benefits of something that's happening 40 years down the line. But also, I think I want to see proof of concept somewhere, not just an idea.
So I mean, the difference there is more or less that you want to see quite early profits, that the businesses can be profitable from an early start. It's not like you pour in a lot of money and hope for a big success in the end.
I mean, there are many ways to skin a cat, but I would say that from our perspective, we prefer to build the businesses in a structured way, earning money along the way. And a company that can't earn money from the beginning usually has difficulty earning money later on too. So yes, we prefer if they make money.
So now that we're getting into your investment style, I think it's a good segue over to speak about where we started. I mean, you joined Salénia as an active owner in 2003 after a career spanning from financial analyst at Procter & Gamble, being a reporter and an editor-in-chief at Finanstidningen, as well as an executive vice president and a communications director of one of Sweden's largest banks, Swedbank. So can you tell us a bit about the years before you joined Salénia?
Yes, I was, really interested in the stock market. I was fortunate enough to grow up in the 1980s, where everything was the stock market was the thing, right? On the one hand, on the other hand, we had virtually no information. I mean, we had the daily papers, and then we had the wonderful annual reports. I heard your podcast with the CFO bookshelf, and the host there talked about that he had 3,000 annual reports in his basements, which seems kind of a strange thing. But I can somehow relate to that because my first summer job when I was 16 was at a company here in Stockholm called Carnegie, where my first assignment was to sort their library of annual reports. And then I asked if I could take any excess annual reports that they have. home to myself. And when they said yes, that was possibly one of the best days in my life. Not for my parents though, because the whole apartment was kind of swamped with annual reports. But that was how I got going. But I think it's an important point how little information there was though, and also. Now you can just, listen to these pods, or you can go out on Amazon and buy any book you want to. But at that point in time, just buying a book about investments was like virtually impossible. And I mean, your family has been in the book business, and I don't think they were, hot sellers in a regular bookstore. So it was hard to get information. Then I was fortunate enough to do something called Öhman's Börsguide, which was kind of an analog version of the internet. So we compiled all annual reports into one page for every company, and we did that manually. So you learned a lot doing that. I did that.
Was it more than text, or was it some metrics as well?
It was just metrics.
Okay.
No text. It was like just a short description of what the company was doing, and then it was just metrics. And they had their own specific way of sorting things. So they took out extraordinary costs and income and kind of boiled down the P&L. But it was very, I learned a lot. Then I started working at a business daily called Finanstidningen already in 1989 when they started, as I was studying at the Stockholm University. Then one thing I want to mention, I was head for the student union at Stockholm University in 1992. That might seem like a very random thing to bring up here, but I'll get back to that later. That was where I met David Mindus, who founded Sagax, namely. And then in 1993, me and my brother had a small stock portfolio that we had inherited from our grandmother, and that portfolio developed fairly well during the 80s, and we were fortunate enough to sell a big chunk of our shares in that because of a bid just before the Gulf War broke out. So we had a lot of luck. Luck should not be underestimated in how things go eventually. But then in 1993, we bought a small group of companies, which, our father, he didn't have the money to do that, so we kind of acquired it, and everyone said we shouldn't do it. And then when it all went well, everyone was like, we told you to do it. So success has many fathers and failure is an orphan. But that was really the start of our little business group that we then developed. And then I had, my career is basically what you outlined.
And how come you worked at Procter & Gamble as a financial analyst?
Yeah, that might seem like an outlier. I ask that myself sometimes. When I was done student union in 1993, I'd been at the university for 6 years, so both my parents and myself were actually wondering if I was ever going to get out of there. So I applied for 10 jobs, and remember that this was in, the nadir of the economic cycle after the financial crisis in Sweden. So I just applied for 10 jobs, and the first one I got an answer from was Procter & Gamble, so I started there. And Procter & Gamble is a fantastic company. They're so structured. They do everything their way. It works. But it wasn't really for me, so I wasn't there that long.
And then the role at Swedbank, or how did that come about?
Yeah, after Procter & Gamble, I worked at Finanstidningen, which was probably the most fun job I ever had. We were like 30 people between 25 and 30 doing this business daily. Great fun, but that of course put you in the center of attention for a lot of would-be employers, because they saw you every day. So to that extent, I was recruited as head of investor relations, and then probably after having asked everyone else, they recruited me as head of communications for the bank when I was 32. So what do you know when you're 32?
It was a young age to be an IR manager, definitely.
Yeah.
I'm 33, so yeah.
High time.
Exactly. But was the plan to work for the family business? I mean, when you entered in 2003?
That was what I was aspiring for. Of course, having had both the folding of the shipping company in 1984 and my father stubbornly keeping to shipping and also starting an airline, we didn't really know what was going to be there. So we hoped to kind of go into the family business one day.
But you didn't have any influence on your father with those decisions, or did you discuss those matters?
I try to remember that sometimes, and I'm not quite sure. But we weren't a family where we discussed the business over the dinner table to that extent. We discussed a myriad of other things, but not specifically business. Then, both me and my brother hung around sometimes up at the office. I think, not least because they had an Apple II where you could play games. But we I think to a certain extent we got exposed to the business, and we were both interested. You could read about it in the papers and so on. But I wouldn't say that we influenced our father in any major way when we were young.
And he wasn't so that he took you in meetings and tried to give you.
We were on the board of the shipping company, which eventually turned into Frontline. But when it got stock listed, of course, we left that place to someone else.
You mentioned Sagax, and this is, in my interpretation at least, one of your personal strong marks in as an investor. Sagax has definitely been one of the most successful real estate businesses in Sweden, and possibly I think the best business in terms of return for shareholders. Can you tell us more about how the investment started and sort of the journey?
Yeah, I'd love to. Sagax has been fantastic, of course, and it's I wouldn't believe that we'll do such a great investment again. It has actually been, there are 27 companies that have returned 100 times the last 15 years globally of the stock listed companies, and Sagax is on 10th place there, and I think WWII is in 12th place. So there are actually 2 Swedish companies on that list. But as I said, I met David Mindus at the student union, and he worked in different real estate outfits after he took his exam in Newsec and then in GE Capital. And then in year 2000, he thought he had found a niche, which was in light industrial and logistic real estate. And we decided to invest. It was a fund at that point. So I think we were the largest investor in that fund. And then he started a second fund. And then in 2004, we turned both those 2 funds into a stock listed company, or they bought us technically, but we became the biggest shareholders in that company. And since then we've stuck to our guns. So we're still industrial, light industrial and logistical for the most part. And secondly, we've expanded geographically. So these days, just in excess of 20%, I would say, is in Sweden, and the rest is, in Europe, in France, in Holland, in Spain, in Germany. And then I would like to add the last one is that we got an investment grade in 2018, which made it possible for us to get fixed rates on our bonds, which we utilized. So we still have 3 years left of interest rates, and I think on an average of 2% or something like that, which has been beneficial. But all credit must go to David. This is a company that he has built, and he could easily qualify to be in the Outsiders book by William Thorndike, both in terms of asset allocation, but also in terms of the corporate culture that he has instilled in that company.
Can you talk a bit more about that? Do you have any nuggets there on what he has done and why you think he has succeeded so well?
I think he has a very clear vision of what he wants to do. He's very shareholder orientated. I mean, he's a big shareholder himself, but and then as everyone, we appreciate that you can't get shareholder value if you don't kind of address your other interest groups. But the shareholders are the one that are centered upon, which I believe also in Outsiders is the case. And then I think we've been fortunate to have perhaps a good balance between risk taking and capping our downsides. The two major flaws you can do in a real estate business is firstly to buy real estate too expensively, and secondly to take excessive financial risk, meaning too much leverage or being too open-ended in terms of interest rates. But David has also managed to instill this view into the management as a whole, and then it kind of seeps down in the whole corporate culture. But it really stems from him.
And when we spoke to William Thorndike in episode 30, we asked him about now 10 years after you published The Outsiders, if you would do a revised version, what would you put in there? And one thing he mentioned is to have more international examples. So it's definitely a good idea to talk to Will about that.
Yep.
And one thing, I mean, another thing from The Outsiders is that all those outsider CEOs, they are, I mean, sort of anti-promotional, sort of. I mean, they are not outspoken, and I mean, they do their job behind the scenes more or less, and that seems to be the case with David as well. I mean, you never see him on the big Swedish newspapers and so on. There's
probably some inverted correlation there that could be interesting to kind of look at. But it's interesting if you look at communication. If you're a great communicator, being in the media has a tendency to feed itself. I mean, I've been working as a communications and IR director, and it I wouldn't say it gets like a drug, but you want to be out there, and I think avoiding that avoids a lot of unnecessary time spent on diverse things.
And the next question about Sagax is that in the beginning it seems like quite sort of mundane business in terms of buying those like industrial buildings outside city centers and so on. What got you intrigued? Was it David, or was it like the actual business case?
I would say it was David first and foremost, and then secondly the business case that he presented, where these type of properties have a higher yield than almost any other comparable real estate.
And without having higher risk, or
I would say they have lower risk, even because the rents are so low per square meter that you don't move around to arbitrage like you do maybe in a like a business or commercial in town. So really the tenants are very stationary usually, and so we have a low turnover, and then usually we have triple net rents, which means that the tenant does everything and pays for everything. We just get the rent, and then they return the property at a certain point in time if they want to leave it in a certain state.
Another company you funded from the start is eWork. What is the origin story there?
Yeah, the founder there is Magnus Berglind, who is still on the company and still a big owner. But we were invested from the start, and might be worth mentioning that eWork is a supplier of consultants, IT and technical consultants, but through a huge database. So they don't have any employed consultants themselves. We're like a Uber for IT and technical consultants, and we have roughly 12,000 consultants out today. So it's a fairly big business, and I would say that. As all companies, it was a struggling beginning, and then we had Telia as a big owner, so we bought them out in 2004, and that we increased our ownership at that point in time. We've been fortunate to stand roughly in the right place, but I would say this is a company where we work a lot, because of all our investments, it's probably the one that has been most susceptible to paradigm shifts of different sorts, and we've worked a lot with that. So it's I think also worth mentioning that apart from what you can see in the share price, it's a very strong cash conversion. So you have like a 5% dividend in this, and it's a well-rounded business now in Northern Europe.
And I mean, we talked about challenging times before, and I mean, around the millennia with the IT crisis, and I think, I mean, I wasn't so involved in business at the time, but my interpretation is that there were many highly valued IT consultancy companies, which then, fell down to the floor. How was that experience with eWork?
That was just when we started, but to be honest, the company started as we were just going to be a software, with where customers and consultants could integrate and kind of move around, but that didn't work out. So we had to pivot and take responsibility for the delivery of the consultants. So it became a more manual business. Now we're moving slowly towards being that software that we thought we were going to be 24 years ago.
Takes a lot.
So we were just a bit ahead of our times, but that goes for a lot of companies in year 2000.
Yeah, and many companies die in between there, but you managed to pivot then. And I mean, going back a bit to Sagax, I have to ask about the crisis in 2008. How was that in that company?
You can say we were a bit lucky. So we had gone into a long-term financing deal with a German bank in 2007, fixing our loans for 7 years. So we were in a pretty good position, actually. And we also got a credit line for 2 billion Swedish crowns, which was a lot of money at that, not in 2007, but in 2008, which they honored. Over that time, so we had a possibility to actually acquire a lot of properties at that point.
It was an okay time then.
Yeah, we were fortunate to that extent.
And in 2018, you invested in Green Landscaping, a serial acquirer focused on landscaping services that we at WWII have followed closely the last years. And when you invested in the company, I think they have had a quite tough time. Having bought multiple turnaround companies, what do you think the company has done differently since?
When we invested, it was IPO'd by a company called FSN, which is a Norwegian private equity player, and they had owned it for a long time, and I think they felt it was due. But what we liked was it's a very stable business. It's landscaping, and basically we do everything that goes like down to 50 centimeters in the ground. We do some other things too, but we do parks and we do trees and we do everything. And we thought it was a stable business, even if you look 100 years down the line. There's not going to be paradigm shifts. It's still going to be, the grass has to be cut and the trees have to be cut and so on.
Irrespective of AI.
I hope so, or we'll have other problems maybe. But so we like that. It's also stable in the sense that there are a lot of public partners as customers, so that's a good thing too. Maybe 2/3 of the business historically has been there, and we've also seen that through business cycles that is kind of sturdy to that extent. There is scope for organic growth. Everyone is talking about greener cities and so on. So there is in the mega trends, I would say it's well positioned as well. And then there was room to improve margins. I mean, that's a positive take. You can say that vacancy is a potential in a real estate business, but there really was, and they had a good case for how they were going to do it. So and then the last thing, which I thought was very important, was that the CEO and the management had skin in the game, as well as the chairman. So they were big owners, and we want all our CEOs to be, tangible owners in a way that's tangible for them, so that they kind of when the share price or whatever happens with the share price, or rather the underlying business, it's important for them. So that was it. But there was no real kind of roll-up case at that point. This was three big incumbent businesses that had been merging for a long time. But then from 2018, we've acquired 32 businesses, first in Norway and then in Finland and then in the Baltics and now in DECA, Germany and Switzerland and so on. I think that has been a change, and I would really like to highlight both the management in the company who has done this very well, and also our chairman Per Sjöstrand, who is in Instalco and other roll-up businesses, who has been very valuable, I think, in kind of getting us in the right direction.
And a question I have, I mean, as you have Sagax, you have Green Landscaping, and real estate companies rely more on debt than serial acquirers, but successful serial acquirers are quite prudent with debt and mostly use their own generated cash flows, of course. But what we see in terms of looking at the whole serial acquirer spectrum is that almost none of them fixed their interest rates, and it's easy to say now when the interest rates gone up. They maybe should have done that, but why do you think that isn't even a question among serial acquirers to fix their interest rates?
I think what really I think firstly it's a good thing to compare, because real estate is serial acquiring in a way. You buy assets and you leverage yourself and so on. So there is a similarity, but I would say that the good thing for Sagax was that we got investment grade, so we could actually do this on our bonds. We could get fixed rates, otherwise we couldn't. So you're not always in a position where you can fix rates. You can do it with swaps and other things, but I think that's something that probably could be improved. Right now, everyone wants variable rates because there is an expectations of the interest rates coming down. But of course, in hindsight, more companies could have fixed their interest rates.
Do you think that could be the case going forward, that this will be looked at more closely?
I think so, yes. Yeah.
And you mentioned Green Landscaping has been like a really successful roll-up. As you said, buying 32 companies the last years. How do you think about creating value from acquisitions?
I had really not a big experience of that before Green Landscaping, if you don't count Sagax, which is some similarities, but also not a true serial acquirer, because in serial acquirers you also get the operational risk, which you don't get with a property. But properly executed is a great way to create value, I think. And then of course you have to have an idea of what you're doing. You have to be back to values in the company and so on. But we are very focused in Green on cultural fit, that we find the right entrepreneurs that we buy. And a very good way to find the right entrepreneurs is asking other entrepreneurs that we've bought in that country, who are your really good competitors. Also valuation, you need discipline. I think, you have to set a multiple. It's easy to just get carried away when the competition is fierce, but sometimes you just have to sit on your hands. We've done that in Sagax as well. There have been periods when we haven't bought, very much. Then you have centralization versus decentralization in a group. Should you call everything Green Landscaping, or should you let them work under their brand names? We've chosen a decentralized concept because we think that it makes the entrepreneur kind of more interested to perform if he still works under his own brand name.
And that was sort of a pivot, right? In the early days, we see that some of the businesses were merged into Green Landscaping brands, sort of. So that was also
Indeed. And you can say that there were three big companies and you had this, let's merge them together. But I think we've pivoted that for sure. And then governance, of course, how hard a grip should you have on the decentralized companies. Leverage, of course, also. We've seen a couple of companies maybe go too far out on that exuberance in the good times. So there are a number of factors, but I'm still a learner in this. But I think it's fascinating. You can definitely create value.
And with Sagax and green landscaping, a common denominator is also that they're quite focused on what they do. I mean, they don't buy so for Sagax, they buy certain properties, but they shun others, and green landscaping focus on a few set of businesses which are quite similar.
Yeah.
How do you think about that versus companies that buy more?
You can see it. You can take that for eWork too, but you can see it as a matrix. Really, you can expand, functionally and geographically. And some companies choose the whole matrix, and in Green and Sagax and eWork we've chose one function and then different geographies, and that's usually enough to kind of grow the company at a reasonable pace.
Do you think it comes then with lower risk? Then is that like a key?
I think so. Yes, yeah. There are a number of examples of companies who work over the whole matrix, so to speak, and do that very well. But I think just intellectually, it should be easier. I mean, when we look at a landscaping company, regardless of geography, really, we know the nuts and bolts of how to run that business. And then, from geography to geography, there is, of course, differences in how that market works. But what we're doing is usually pretty similar.
And you are the chairman of eWork, you're the chairman of Sagax, and you're on the board of Green Landscaping, and you've been on other boards as well. So what, in your experience, makes a good board work?
I think, of course, the persons on the board are instrumental to that. I think we're being on the board for a long time is a good thing. I think in the US, it's almost been frowned upon that you should mandatorily change people after 8 years, which would have been bad, for instance, in Berkshire Hathaway. But I think experience is good to that extent. And then it's the CEO. That might sound strange, but a good CEO leads to good board work. And if you don't have as well a functioning CEO, you start to second guess, and a lot of things go down to minutia instead of working with the big questions. So that's the most important thing for a board, really, to find the right CEO.
And do you have any practical advice, like things that you have found works well when you organize the board work?
I mean, there is a fairly standard practice, I would say. You have certain things are given. You have a board meeting for every quarterly report, and then you have a strategy meeting maybe over 2 days, usually in the beginning of the fall, to kind of set up for planning the next year. And then on the good boards, you can summon them almost any time. It's like, okay, we need to buy this, and we need to have a meeting Sunday evening. And I know it's Saturday evening right now, but so there is a commitment to kind of work whenever necessary, also from the board perspective.
Which probably also helps then when people have skin in the game, as you mentioned.
Yeah.
And in general, I mean, as an investor and a business person, you seem to have a very long-term mindset in everything that you do. And so I'm curious to know, how do you measure success?
We're simple folks, so we measure annualized returns.
And when do you know when to give up?
Some would argue no, but I think we've become better at trying to stick to our winners and kind of let our losers either be sold or fade out. But usually we really try to hang on to our companies, and there are different investment philosophies. Some friends I know invest in 100 companies, and things are happening all the time, and it's every day there is a crisis somewhere. But we prefer to maybe make few investments and try to work a lot with them instead. And both concepts work. But from our perspective, we found this being a bit more selective, perhaps being better for us. And I mean, measuring returns is difficult. We had 21% per year, I think, since 2003, non-leveraged. But Of course, I've hard to see that we can sustain that over time.
I guess it varies in between the years as well.
Yeah.
And in the book, your dad, Sven Hampus, he says that family companies that survive are the ones that reinvent themselves every generation. So if we look ahead 10 years or even more, where do you see Salénia heading?
Well, I should probably have brought the next generation here to kind of tell me about that. But I think he has a very good point. I think now, if there was a silver lining on the shipping company folding cloud, it was that we had perhaps a bigger freedom to pursue different investment strategies and alternatives than we would have had otherwise. And I know a number of family businesses and business families that are kind of not stuck with their business, but they're very committed to the business that their grandfather started back in the days. But so maybe we've had better possibilities to divert into other types of businesses than we would otherwise have had. But I think you have to find your own way.
And on that question, and switching a bit from business and investing to life in general, we read about Sven Salén's interest of high speeds and sailing, and I mean that's a passion that you have as well. I don't know about high speeds. Is that
if you ask my wife about my driving, she would probably attest to that.
And I mean, I really love the last section of the epilogue of the book, where you write that life is a whole. And it's when you can refurbish energy elsewhere, whether from family, sailing, skiing, or song, that you find the power, creativity, and ability to make entrepreneurship flourish. I'm curious to hear more about this.
Sounds almost poetic. But I think on a more serious note that firstly, sometimes in investment, I think people tend to mix high activity with great returns. If you do things all the time, it's going to get better and better. And it's not always the case. You have to kind of sometimes also leave your investments or companies be for a day or two and let them manage themselves. But then also that you can actually replenish yourself by doing other things. In my cases, it has been a lot of reading. I was fortunate to be born into a family where we read all the time. It was like the perfect summer vacation was being on the sailing boat with everyone reading at every instance. So I think you need to regenerate from time to other, and that's very important. That might of course be more difficult today, because if my grandfather worked with telegrams every 7 days, it's like now you're always connected, so you need some discipline in that as well. That being said, I'm really bad at that. I'm working almost all the time, but I still have time to do other things. So maybe it gives you a freedom to be in other places that you didn't have previously. Then we should mention that my grandfather actually had the Swedish record in long jump with motorcycle in the around 1920. I'm glad he survived that.
And you're not trying to push that?
I think my Evel Knievel days will never really appear.
Was it so that it wasn't an accident and then stopped?
He tried to do the same thing with a car, and that didn't really pan out as well as with the motorcycle. So after that, he felt that he was kind of done with jumping.
I'm curious about one thing you mentioned earlier, that you didn't discuss business over the dinner table at home. So what did you talk about there?
No, it was a lot of history. My father is a fountain of good stories, so usually that and regular family things. And then of course my father traveled a lot. I think at the height of the 70s, I think he had like 250 travel days or something. So we didn't always have these communal meals at home.
Understood.
Did that influence you in any way in being more present with your family? Or?
I think most people who grew up in Sweden in the 1970s and 80s were probably under-curled compared to today's children. I don't know if that's our generation overcompensating or something else, but I've probably been more involved with my children, but that's not down to my father. I think that's how things worked in the 1970s.
And I think now that we have been speaking about this great book and your business and your background, I'm sure that many of our listeners are curious to get a copy of the Salén Story book. Is that possible?
Yes, this might be a high-risk gamble, but they can actually email me if you put my email address in the somewhere that you find prudent, and we'll send it out.
Maybe limited to a certain number.
Yeah, the first 2,000. No, but see when we run out of books. But right now, there's not a huge demand right now, so we'd be happy to send them out.
Yeah, we have a few thousand listeners from more than 100 countries. So
okay, we'll see, but we'll do our best.
And do you plan for an updated version in 2025, celebrating the 110 years of family business?
Yeah, it's always difficult. When you write these books, it always tends that the present kind of overshadows the past. So, but at a certain point in time, I'm sure we'll revise it.
And I'm curious to speak a bit more about this information. I mean, you mentioned that you work like all the time. There's always something happening and no telegrams anymore. And about the annual reports being very limited to that in the 80s and 90s as an investor. Do you think there's too much information today, and how do you handle that?
Yeah, I think there is. I think it's very easy to get swamped. There might even be too many books on investing, but I would say that you have to kind of. I hardly read the daily papers anymore. For instance, I think it's mostly noise. But no, you have to select. I think a few sources that you really use.
And which are those for you?
I think Wall Street Journal is good. Financial Times to a certain extent. Economist, I think is good. And then I actually use Twitter a bit for information gathering. If you follow the right kind of information sources, I think that's a good place also.
No annual reports?
I think I got my lifetime share of annual reports in the 1980s. So, of course, in our own companies. But at that point in time, they were like perennials. You had them for a year, and that was the most important information on a company for a much longer time. Now they get irrelevant like a month after they're published.
What are you reading right now?
I have the bad habit of reading a lot of books at the same time. It's kind of rolling a number of balls in front of you. But
why would that be bad? I do the same.
Yeah, maybe you should just focus on one thing. But the 3 books that I'm reading now is Chip Wars by Chris Miller, which I think is interesting. And if you look at what happened with the US and Japan in the 1980s, there might be the same thing going on now in China, and how protectionism seeps into the otherwise very capitalistic US system. And then What You Do Is Who You Are by Ben Horowitz. That's from Andreessen Horowitz. And that's about corporate culture. Very interesting. What is corporate culture? And there are a dozen books on this, but he poses all the right questions, like which essentially boil down to that you need a leader that kind of lives the values that he's talking about. And then you have to like those values as well. But then they seep down in the organization, and everyone in the organization has to understand what the values are. Should you answer an email today or in 3 days? Should this memo be 1 page or 15 pages? Should I stay at the Four Seasons or at the Red Top Inn? And there are no rights and wrongs, but you have to understand what your company wants from you and fascinating book, I think.
Is that also about incentives in some way?
Yes, but less on that. I would say it's more what is, where does culture come from? And it's definitely not from a document somewhere. It's like what you do. And then finally I read a book called The Wizard of Kremlin by Giuliano di Empoli, which is it's a semi-fictitious book about Putin's communications director and how they worked towards the West to kind of not take sides. I think that's a common misperception. It's rather to create chaos and polarization by sponsoring both sides as far out on the fringes as possible. It's an interesting book.
3 quite different titles there.
Yeah.
And I mean, I also read different books at the same time, and I think it's pretty good because then you can always pick up one book and then now I feel more like reading this one, so then you read that one, and you're never really like, I'm running out of it, and then you don't know what to do. So you always have something, you're somewhere in some book. Yeah. And often you can find very interesting connections between those books as you read them in parallel.
Yeah.
So, but everyone finds their own way.
Yeah.
And besides the Salén story, what would you recommend us and our listeners to read to improve, both as investors and human beings?
If I look at the books that I would recommend from, investment, business kind of area, a lot of them you actually brought up on your top 10 list. So that was a bit disappointing when I listened to that. But one book that was formative for me was the Essays of Warren Buffett, which I think is fantastic and is a great, one of the great fundamentals for myself in how I view business, really, by Laurie Cunningham. Then secondly, Outsiders, that we've already spoken about here, which I think also, asset allocation, values and so on. You could, of course, take Poor Charlie's Almanac, but that's a very difficult book to go around with. I usually read when I travel, so you need like an extra suitcase for that. So
it's now available on Kindle.
Oh, okay. Oh, really? And I thought size-wise it would be difficult since it's more like a coffee table. But that's a fantastic book. But if you don't want a book that weighs 5 kilos, you can take a guy called Ken Griffin, who's written a book on Charlie Munger as well, where he kind of condensates. And Munger is, of course, a lot about temperament and how you should relate to Mr. Market or whatever you want to call it, and his coolness under fire in a sense, which I think is hard, easy to talk about and very hard to emulate. And then Price of Time, I liked a lot that we talked about earlier, Chancellor. And then I could, Taleb is always good. I think Skin in the Game is important for me when I look at we talked about that earlier as well.
I'm reading his Anti-Fragile right now.
Yeah.
But I think, to echo that, reading The Black Swan the first time was like, oh, wow, this changed how I think about many things.
Yeah. No, and he's one of the few writers actually written a bunch of good books. Usually you have one really good book in you, but he's done a couple. And I think that's one you could choose. But otherwise, I read, I don't read that many business books, to be honest. I read a lot of history, biographies. I read a number of books about, robber barons. That's fascinating. Rockefellers, Vanderbilts, J.P. Morgan, and so on. They are usually good reads from a very different time. And then read about music, anything.
Is there something you avoid?
I don't, as you might have done, you might have checked out the Warren Buffett and Charlie Munger, favorite books. And Charlie Munger has a lot of science books. And that's somewhere around there I kind of struggle.
I understand. But how about fiction? Do you read any?
Yeah, I read a lot.
Good. Staffan Salén, thank you so much for coming on Investing by the Books podcast.
Thank you.
Talk about you and your exciting family history. Do you have something more you want to add here before we finish up?
I'm glad my voice held up to this point.
We are very, very glad for that too. And lastly, where can our audience follow you and your work?
I'm not that big of a social media kind of guy. I would recommend to go into the websites of our companies. And we also have a website ourselves, but it's very frugal.
Perfect. We'll put that in the show notes. Thank you so much.
Thank you.
Thank you, Staffan.
Thank you for listening to Investing by the Books, a podcast by Redeye. Follow us on Twitter at @IB_Redeye and email us at ib.podcast@redeye.se. To improve, we'd love to hear your feedback, so please rate and review us. Notice that the content in this podcast is not and shall not be construed as investment advice. This information is meant to be informative and for general purposes only. For full disclaimer, visit redeye.se. I'm your host, Eddie Palmén, and until next time, I sincerely wish you the best of luck on your journey through life and investing.